everyone. So, Luz Gonzalez here, and this is Matt Gorin, my friend, and he's a financial advisor. But beyond that, a fiduciary, and we're going to be talking about what the difference is and why it matters and why you should care. So, let's get started with that. I know that in my searching and all of the reading that I've been doing, I've been told and that I know that to manage my money, I've cared about having not just an advisor, but a fiduciary. And so I've asked Matt some questions, and I think it'll be helpful for him to share some of the information about just like what's the difference between just having an advisor and a fiduciary, and why those differences matter in terms of how we think about how do we manage our money, how do we think about our money, who's managing our money, who's giving us guidance as to what we should and should not do, and where our money should go. So, Matt, tell us more about who is an advisor, what is an advisor, and how is that different from a fiduciary? What's a fiduciary?
Sure. So, a financial advisor is, broadly speaking, somebody who helps you manage your money, who helps you manage your financial life.
Okay.
And a fiduciary is generally speaking, somebody who has someone else's best interests at heart, that they are held to a standard where they have to look out for someone else. And all
this is going to be your best interest at heart.
Right. And not all financial advisors are fiduciaries. Someone with, for example, a certified financial planner designation is a fiduciary. Somebody who works for a brokerage firm and takes your stock orders is not necessarily a fiduciary.
And a lot of times people think that by working with a broker, by that working with their 401k, that they're having people who have their best interest in mind, and they might have it in mind, but they're not acting upon it.
Right, definitely. I think a lot of people believe that they're getting someone who's looking out for them, not actually the case.
Okay, so that's the difference between an advisor and a fiduciary, and so that applies to brokers, to many of these, like the 401ks and many of these other plans. Now, so something that I don't think about very often, but I think that would be important, and something that I mean, to some extent, I especially with my age and the work that I do, that I don't think about enough is risk management. Tell me more about why someone like me should care about risk management, why it matters, why it's important, and how to even think about it and how to start managing that.
Yeah, so one of the nice things about working with an advisor is that a comprehensive advisor who really has your best interest at heart, they're not just looking to manage your investment portfolio, they're looking out for other things like, are you at risk for something like becoming disabled on the job or not having the right medical coverage and these sorts of things. If you look back historically, number one cause of bankruptcies before Obamacare came into effect was an unforeseen medical expense. One of the number one reasons people can't retire on time is that they became disabled on the job and they lost their major source of income. Yeah. So not having the right risk management protection, and that's to say, premature death, unexpected disability, some medical catastrophe happening, those sorts of things can throw you totally off the rails. And if you're not protected, that's far worse than not getting as high of investment returns as you were hoping for.
So suppose I started thinking about being protected in that sense. What would that mean in terms of a monthly payment, in terms of what would my investment be?
So the cost of some of these protections is actually not generally very high. If you're thinking about life insurance, if you are in your early 30s, you want to get some policy to protect, say, your kids early on, that might cost you only a few $100s every year for hundreds of thousands of dollars in coverage. If you're thinking of disability insurance, that can cover, say, 60-70% of your income in case you get disabled. That might be in just, say, $1,000, $2,000 a year, something like that. So a lot of times these things aren't all that expensive. It's a matter of knowing that you need to get them in the first place.
Okay, so me managing my money by myself and me managing my money with a fiduciary. How should I think about that? Like, should I be managing my money by myself, or should I be working with somebody like you to manage the money that I do have?
Yeah, so what we see if you actually look at real human behavior is that people, generally speaking, are not very good at managing their money. If you're expecting, a really well-diversified portfolio, you're getting like 5.5%, 6% every year. Your typical investor gets around 3% a year, so they're not even...
That's below the index market, or the index fund that you could invest in.
Right, so you're getting only about half of what you should be expecting. Not very good. People maybe know, I should just invest in index funds, but oftentimes they don't. They think they can outsmart the market on maybe one hand.
Do you know what percentage of investors that is?
So that's your average person is at that half. Some people do even worse than that, and some people beat the market. I think the people who beat it think, hey, I'm smarter, I figured it out, I know better.
Yeah.
Only then maybe the very next year they do even worse. So some people are on that side. They're thinking they can outsmart what's going on. On the other side, people might be freaking out, and the market goes down, they pull everything out. So they're selling low, and then the market goes up, they buy high.
Yeah.
So for a number of different reasons, just having somebody there who's going to help you out, hold your hand a little bit, partner with you, and try to have you make better decisions can really increase your returns.
Okay. Well, so everyone, you just heard about why working with a fiduciary, and we learned about the differences between a fiduciary and an advisor, what they are, why working with a fiduciary would make a difference, especially in the types of investments that you're doing, and then also how to think about risk, how to think about risk mitigation, and how a fiduciary or an advisor could also help you with mitigating some of that risk. So we do have a longer video. We have many other videos talking about some of these financial topics. And if you want to reach out to me, you can comment to this video here below. You can reach me on Facebook. You can also reach me on lucygonzalez.com. And then for Matt?
Yeah, check us out at arete-ws.com. That's www.arete-ws.com. You can reach me at matt@arete-ws.com.
All right, well, thank you, everyone, and wishing that you watch all our videos, but also that you are just financially empowered and do what you need to do in terms of just getting your money in order and your finances in order and living the life that you deserve. All right, thank you all.